Late 2025, Alex Karp, Palantir's CEO, is on live television being asked about the one man publicly betting that he's about to lose everything. And by the end of 2025, Palantir isn't a niche defense contractor anymore. It's one of the most valuable companies on Earth, and its stock is the best performer of the decade, up 341% in 2024 alone. Karp is a strange man to be sitting on that throne. He has a doctorate in social theory, not computer science. He can't write a single line of code. He keeps Tai Chi swords in his office, and on one earnings call, he joked about spraying the analysts who doubt him with a drone. So a reporter asks him about Michael Burry. Burry is the investor who called the 2008 housing crash before almost anyone. And he's just made a large public bet that Palantir is going to fall apart. Karp smiles and calls the bet batshit crazy. But Karp leaves something out. Burry hasn't just talked. He's put around $1 billion behind the idea that this golden, untouchable company is worth a fraction of what the world believes. And a few months after that interview, something happens Karp doesn't have a clever answer for. Palantir keeps winning, the contracts keep landing, the earnings keep beating, and the stock falls anyway. So how does the best company of the decade become the most dangerous stock in America? To answer that, you have to know what Palantir actually does. And to be honest, this is where it gets strange. Because for a company worth over $300 billion, almost nobody can tell you what it is. Palantir was born from the worst day in modern American history. After September 11th, the official finding was brutal. The US government already had the pieces to stop the attack. The flight school records, the watch list names, the money transfers. It all existed. It just sat in separate databases that couldn't talk to each other at agencies that wouldn't share. So in 2003, a small group backed by billionaire Peter Thiel set out to fix exactly that. One of them was Alex Karp. The CIA's own venture fund, In-Q-Tel, put in about $2 million of the early money, which tells you who the first customer was always going to be. And they gave the company a name no PR team would approve today. They called it Palantir. In Lord of the Rings, a Palantir is a seeing stone, a dark crystal ball you stare into to watch events far across the world. The funny thing is, if you know the franchise, you'll remember the crystal ball also deceives the people who use it. It shows them what they want to see, and it pulls them toward ruin. Palantir builds one screen. It takes every scrap of data an organization owns, the records that never talk to each other, and welds them into a single live picture. A soldier can see every drone and enemy position on one map. An analyst can pull a stranger's whole life, everywhere they've been, and everyone they've called, into one profile in seconds. The spy version is called Gotham. The corporate version is called Foundry. With that in mind, you can kind of guess what it's capable of. And a normal company would obviously bury the darkest use of a tool like that. Palantir does the opposite. Its own marketing says the software is, in the company's words, used on occasion to kill people. Karp talks openly about the kill chain, the digital path from spotting a target to ending them. This is the part that makes people flinch, and Karp knows it, and he leans in harder. The strangest part isn't the software though. It's that almost nobody could explain what Palantir did, including the people it tried to hire. Recruiters at college job fairs showed off disaster relief demos and stayed silent on the military work. You didn't sign up for a product you understood. You signed up for a mission you believed in. And that is the key to this entire story. Because for years, Wall Street had no idea how to price a company like that. It was secretive and barely profitable, and serious investors kept their distance. Then, in 2023, Palantir shipped one new product, and all that quiet belief turned into the fastest growing story on the stock market. The product was called AIP, the Artificial Intelligence Platform. In plain terms, Palantir took the same kind of AI that powers ChatGPT and bolted it onto its data engine. Now, a company didn't need a data scientist to ask a hard question. A factory manager could type, in plain English, which machine is about to break and what do I do about it? And the system would answer and then act. That was new. Palantir had spent 20 years wiring up the world's messiest data. AIP turned all of it into something a normal employee could finally use. The boot camps were the master stroke. Instead of the usual year-long sales pitch, Palantir would drop its engineers inside a company for a few days and build a real, working solution on the spot, out of that company's own data. Prospects walked in curious and walked out hooked. One Fortune 500 firm expanded its contract fivefold. The company's net dollar retention hit around 150%, which means the average customer who stayed spent 50% more the following year. And the numbers went vertical. US commercial revenue, the money from ordinary American businesses, grew 133% in a single year. Total revenue grew 85%, the fastest since the company went public. There's a software benchmark called the Rule of 40, where a healthy company's growth rate plus its profit margin should clear 40. Palantir hit 145. Wall Street stopped laughing. In 2024, Palantir was the best performing stock in the entire S&P 500, up 341%. That September, it officially joined the index, kicking American Airlines out. The stock jumped 14% in a day. A company most people couldn't describe was now worth more than $300 billion. That made it bigger than roughly 450 of the 500 companies it had just joined. And the believers who'd been mocked for years were suddenly the smartest people in the room. The retail investors who bought cheap and held were up more than tenfold. Every analyst who called it overvalued at $20 watched it hit 40, then 80. Being right about the valuation just meant being poor. So the doubters went quiet, or they gave up and bought in. Everyone was staring into the same crystal ball now, and every last one of them saw the future. By every number that has ever mattered, Palantir had won, which is exactly why what happened next made no sense. There's one number the believers didn't like to talk about. To measure how expensive a stock is, investors often use price to sales. It's simple. For every dollar a company brings in, how many dollars are people paying to own it? A pricey software stock might trade at 15 or 20 times sales. Palantir was trading at 72. The next most expensive big company in the S&P 500, CrowdStrike, sat at about 39. So Palantir wasn't only the most expensive stock in the index, it was nearly twice as expensive as second place. At its peak, it touched almost 100 times sales. The only other time American companies hit that number was the dot-com bubble of 2000, right before most of them collapsed. To be worth 72 times sales, Palantir can't simply grow. It has to grow enormously and keep it up for years without a single stumble. At that price, the stock is what investors call priced for perfection. Everything has to go right, forever. And if it doesn't, there's a very long way down. A price built on perfection is exactly the kind of thing that draws a man like Michael Burry. If the name sounds familiar, it's because they made a movie about him. Burry is the investor who saw the 2008 housing crash coming while the rest of Wall Street laughed. He bet against it and made a fortune. In late 2025, he started buying put options on Palantir, which are contracts that pay off when a stock falls. And it wasn't a small position. By 2026, Burry had put around $1 billion into the idea that Palantir was going down. He figured the company was really worth $46 to $50 a share, about a third of where it was trading. The whole market had stared into Palantir and seen the future. Burry stared into the exact same company and saw a crash. Same crystal ball, opposite visions. Karp did not take it well. He went on television and called Burry's bet batshit crazy. He accused short sellers of market manipulation, of talking his company down to make money. It was a strong, righteous defense of Palantir and everyone who believed in it. There was only one problem. Karp was selling too. While Karp told the world that betting against Palantir was insane, he was cashing out of it. Across 2024 and 2025, Karp sold more than $4 billion of his own stock. Peter Thiel dumped over $1 billion more. These were scheduled sales, filed in advance, all perfectly legal. But strip away the paperwork and the picture is blunt. The man shouting that you shouldn't bet against Palantir was pulling billions off the table himself. So now you've got Burry's bet and Karp's stand. And for a few strange months, it looked like Karp was going to win, in the most humiliating way possible for Burry. For a while, Burry looked like a fool. Right after he placed his bet, Palantir went on a tear. In its next earnings report, revenue grew 85% in a year, the fastest in the company's history, and management raised its forecast again. NATO, the military alliance of most of the Western world, bought Palantir's battlefield software. Then, the US Army signed a deal worth up to $10 billion, folding its scattered systems onto Palantir's. Every quarter, the company beat expectations and dared anyone to keep doubting it. And the fans piled on Burry. They pointed out that the man had, in their words, predicted 67 of the last 2 crashes. A broken clock, a washed-up bear who got lucky once in 2008 and had been wrong ever since. Every reason he gave for the crash, the company answered with another record. Palantir wasn't buckling under the pressure. It was speeding up. So, Karp was winning. Every number backed him, and the loudest man betting against him looked ridiculous. And then came the part nobody could explain. Through 2026, even as Palantir kept signing contract after contract, the stock fell about 19%. In the same stretch, the rest of the market, the S&P 500, rose around 10%. So the company was beating every target it set, and its shares were dropping. Not because Palantir was failing, because it wasn't failing hard enough. Remember what that price required. Priced for perfection means the miracle is already baked in. When you're priced for a miracle and you deliver a miracle, you don't go up, you just stay flat. And the moment growth slows from insane to merely amazing, there's only one direction left. All the good news everyone was celebrating had already been paid for months earlier, at 72 times sales. This is the trap almost nobody sees coming. Burry might turn out to be wrong about Palantir's business. It could keep winning for another decade, but he could still be right about Palantir's stock, because those are 2 completely different things. And that's the scariest part. Palantir could do everything right, win every war, sign every contract, and still not be enough. So the only question left isn't whether Palantir is a great company, it's whether Burry is right about the stock, and his bet has a deadline, December 2026.